Traders, welcome back to the channel. Today I'm bringing you my top 2 dividend stocks for the year of 2021. Now with these plays, they both have incredible yields. One of these stocks has a more upside of growth for the stock because the sector was just so beat down. And then the other stock is going to be my safer, longer term pick, but it also has a massive amount of room because the way that the economy is shifting right now. So stay tuned for both of those plays. Before we get into the content, I need you to do 2 things if possible. Hit that sub button down below because I'm posting stocks every single day that I love. And also make sure you smash the thumbs up because it really does help the channel. But let's not waste any more time. Let's get to it. All right, so let's jump right into the content. So as we zoom in here, you can see a little bit about EPD. This is the first play. This one has the more growth because right now it's being held at about $22. The fair value of this will pump back up to about $30 once oil gets back to its original price. And so as you can see, this is an energy play. A little bit about them. EPD is one of the largest publicly traded partnerships and leading North American provider of midstream energy services to producers and consumers of natural gas liquids, crude oil, refined products, and petrochemicals. Basically, your favorite boomer stock. Now, I'm just joking. I'm in Texas. We love our oil. So as we're coming down, they have a lot of use cases. And if you don't know anything about this industry, specifically in Texas and in the South, you've seen this industry be completely wiped out. Now, it's making a very strong recovery. And EPD, compared to some of its competitors, is making that pre-COVID level retest a lot quicker. So that's why I'm focusing on them. They're making that quick recovery. And with a dividend play, you want some steady growth. Now, they have a lot more room for growth because we're seeing pre-COVID levels being established from Exxon, ConocoPhillips, and Shell. They're already announcing that they'll be back at that production level by the end of 2021. So it's very strong news when it comes to oil plays. Now, this might be like I'm talking a different language to you, so bear with me. So this is what their rate was going in the yield for the past few years. Right before COVID hit, the dividend yield was at 14.51%. Very high. And then it gradually decreased over time, and now it's sitting at about 8%. Year over year, they were averaging an increase on 2% per year, getting back up, and then as COVID hit, things just started to change. So that's worth noting. They're constantly increasing, and the average payout on these yields is about 83%. So the trailing 8-month yield payout of their earnings is 83% of the earnings that they receive, they are paying back out in dividends. That's important to know that they're paying that money back on. And they're expected to do 90% of their overall revenue in dividend payouts next year. So this is extremely strong news. So if you're looking into a growth type play, I definitely think EPD is going to be the play for you. Now, I wanted to do a little bit of a review and look at other high growth yields. This honestly is one of the highest growth. 8% yield on a dividend is absolutely insane. So right now, if you're sitting at $22, it's at about 42 cents, give or take. That's how much each stock is going to pay you in a dividend. That's a pretty high amount. So as you look at this dividend yield, you can look at the other competitors here. With ExxonMobil, I mentioned them. They're at 6.3%, so they're definitely not beating there. AT&T is going to be the other company that I'm mentioning here. I really like what they're doing, and when we look at the chart, I've been mentioning them a lot over the course of COVID because they've shifted their business model and they now own HBO. And if you don't know about the streaming service switching that's going on with the competitors, with Cinemark, AMC, and these other theater chains, they're now streaming their movies directly to consumers. And I believe this is going to greatly increase the revenue coming in from the HBO side of things, along with fiber optics coming out from AT&T as well. So there's a lot of use cases coming in with AT&T, and I believe internet is going to be more in demand than it ever has been before. I mean, if you don't have internet, do you live under a rock right now? So that's the really important thing to know. So I want to look at AT&T a little bit. I'm not going to go too much into the DD on the company. You know what AT&T is doing. You know the growth that they're establishing. We know that streaming services are dominating right now. HBO is definitely one of the leaders up in that category. Go a little bit into the details saying why they're so good for growth. AT&T has positioned itself well within a growing industry. The telecom industry is competitive and requires a lot of upfront capital, but cash flows are solid. AT&T has more than enough cash flow. They are not like a startup. So when they shifted their business to grow this side of the company, they had more than enough cash. They didn't have to take any debt on hand, if you do not know anything about that. This makes AT&T one of the top high dividend stocks to watch. Now, when I'm mentioning my dividend plays, I'm mentioning stocks that I not only have a high yield, but also have a lot of room for growth as a stock. So we could have went into maybe a more safer energy play on the EPD side of things, but I believe EPD has a massive rate of growth, so that's why I want to play both sides of it. I want massive growth on both sides because I do expect a somewhat of an economy crash coming in the next year and a half, 2 years. So that's why I'm looking just for the year of 2021, then I'd reevaluate at the end of the year. Okay, so we're at EPD chart. This is EPD. So this is the chart. So as we look at this chart, I want to go over a few things. This was pre-COVID right here, and we're sitting at 14%, a little bit over. We'll say maybe 15, but we'll say 14. We're sitting at 14% at that level. So as we look there, that's where we are at 14%. We're sitting a little bit below it, below a key resistance, I might add. So as we look at this, we're underneath the strong resistance. As we look here, this is called an SR. If you don't know, this is called the support and resistance. This is a major level. You can see we were retesting here, 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 and here. And then eventually we broke through it during COVID and we came down. And it became a key resistance. Now we're being rejected and we're trying to break back above. If you know anything about the economy right now, you can see that we're potentially pushing all-time highs on the Nasdaq, Dow, and SPX. Those are very key focal points you need to focus on. We're also getting back into the summertime when oil does particularly well and dominates across the board. This is the time of the year when oil performs the overall best. So I do believe there's a high possibility in the coming months, maybe even 1 month, we start pushing directly out of this range back to those local highs of $30. So, I mean, if you do the math there alone, that's going to be another 40% give or take of profits off of that, not alone just from the dividends. So not only do you have room for growth when it goes to hitting that $30 marker, which I do expect before the end of the year, a $30 price target hit, maybe 29, give or take in that range, but then you're going to have the dividend growth as well. So I see you not only making passive growth from that, but actually active growth coming from the growth of the stock as well. Now you're going to see this support did hold for a very long time. As we zoom back in, you can see this has held since 2016 into 2015 right here. So if you look right here, that's the last time, and then before that we actually had a growth all the way up to $40. I do believe oil is in a state of a boom. We're getting back to those pre-COVID levels and the growth is increasing right now. This is going to be quite a bit of a bubble if you ask me. So I'm not being too greedy here, but once we hit that $30 range, I would reevaluate how we play this. I do see the most growth from dividend plays from EPD this year. Okay, the second stock, AT&T. Ticker symbol is actually just T, so I'll leave it there so you have that. This level has been a pretty dominant support and resistance as well. You've seen this maintained since about 2018 mid, and we kind of managed through. We bounced a little bit below it, came back up, and then we reached those local highs of that $40 price range. Now, I'm not targeting that much growth from AT&T. I honestly would be pretty shocked if in the next 6-7 months we hit $35. This has been a pretty steady growth stock, and as we get a little bit in here, you can see through the whole situation of COVID, I would say we've really had really steady growth. And this has been one of my favorite dividend plays that I'm talking about on stream or anything like that, because we always find ourselves coming back to this $30.50 to about $29.50 range. We keep coming back to that range, and right now, I believe at minimum, that's the basement price of AT&T. We've seen a little bit of spikes coming down in October, but overall, we kept spiking right back up, especially with the news of HBO and the streams coming out. I believe now we're in a phase of price discovery where we're really trying to see where AT&T is valued at, because movies are now going to be released on HBO. And then we're seeing the subscription count on HBO go through the roof, and then we're seeing the 5G services also increasing year over year. We didn't really see that much growth in 2020 because it came at the end of 2020, so we're not really seeing those numbers ramp up either. But I do suspect both of those are going to be pretty major influx in prices when it comes to the value of AT&T. And if you don't know, most phone services charge an additional $5 for the 5G service. So if you do the math on that, that's going to be a pretty massive amount of growth for them as well. And then you see we're actually getting a retest into the zone. So I love buying retests into support and resistances. Now, personally, I love AT&T. I'm comfortable buying it wherever it's at because, like I said, I know this is around the fair value. So if you're looking for something that's going to stay stagnant and potentially hold its value, and if we go into another type COVID type lockdown, you don't really have to worry about it. I believe AT&T is one of the safer type plays there. If something happened like that again with oil could really come crashing back down, and the lockup would really affect oil once again. So that's one thing you need to consider. But I think the short term has massive growth for oil. I think AT&T could easily push back to this 33, and like I said, possibly 35. I would be shocked if we hit that high. That's about a 10% growth from where we're at now. But I do believe, and I like where AT&T is. They could have some new news coming out as well, some more catalysts and more growth as a company. Like, I don't think we have too much news coming out with EPD. There's no news that's going to come out with EPD that's going to greatly increase the stock. It's just going to be gradual growth going back to those pre-COVID levels. But with AT&T, they can announce more news coming out with the streaming services, more movies coming out since it owns Warner Brothers and stuff like that. That's something you're going to have to be paying attention to when it comes to AT&T, because it is more than just, a phone service that people kind of get their mind wrapped around. This is a major tech company as it sits right now. All right, traders, so that's my 2 top dividend plays for the year. If you have any questions regarding those, please ask down below. I also do live streams every single morning from 8:30 a.m. Central, which is market open here in Texas, going into about 10 a.m. Central. So about an hour and 30 minutes, sometimes even 2 hours, a little bit longer. It just depends how the day is going. So if you have any questions, please drop in and check us out there. Have a good one, traders. Namaste.